So from 1,000 to 1,000,000, wouldn't that be nice? I mean, welcome back traders to Study Oasis channel. My name is Ali Casey. Today's video is about how to reach $1 million. It's just a milestone. It's not necessarily good for everyone. Some people might be content with 100 and some people might need 100 million. So it's just a milestone and a figure that we shoot for. Is just a benchmark, let's say. So lately I've been seeing, and I'm sure most of you have seen it, is to how to grow $1,000 into $1 million in 6 months. So I've seen a couple of these on social media, and usually it's some guy behind a monitor like this, and trying to lure you into buying whatever he's selling and to make millions. And these guys, of course, been available since, I don't know. I found them in the 80s with usually through mail. They mail you some brochure trying to lure you in. And of course, I bought some of them. And of course, nowadays, it's so much easier to do it on social media. And let me do the math for you. So, because some of you at one point in time maybe will fall for these. You get bombarded with it, and if somebody credible comes and show you some examples or whatever, then you might say, yeah, it's doable. Let me buy it. It's $20 or it's $2,000. I don't know, but at one point the price point will be okay for you to try it. So to grow from $1,000 to $1 million in 6 months, the math dictates that you need to grow at 317% per month roughly. So you'll go from 1,000 to 1,000,000 in 6 months. And then you should ask yourself, well, why stop? Well, then the next 6 months, guess what? You'll reach 1 billion by end of the year. So you start 1,000 in January 1. You end up with 1 billion in December 31st. So whoever is offering you this, why the hell waste your time and, do video and post on social media? In 2 years, that's it. You'll be the richest man in the world. And if you even come up with your own reasons that no, it's capacity and no, some people don't know about this, still, every month start with 1,000. In 6 months, you will end up with 1 million. Why teach it to anyone else? Just keep it to yourself. Be a millionaire in 5 years, and then you can give it to someone else. So this is like just a wet dream. There's nothing else to say about it. This will never happen, and it's not because I'm saying this. I'll give you the best people who are trading. So I'm not gonna account for the, let's say, 60s, 70s, 50s, whatever. When the market was really simple to trade and the interest rate were 20%, and you could easily make 40%. I'm gonna just count the current champions. And these are not a one-time deal like, in the Big Short in 2008 or in the dot-com bubble. No, these guys who have a record for the past 20 to 40 years, and they've been generating double digits returns since then. Most of you have heard of Ray Dalio. He manages Bridgewater. I think they have 160 billion under management and making double digit returns. And then there is Winton Capital, which is also about $100 billion under management. And then, of course, most of you are familiar with Warren Buffett, although Warren Buffett really is a value investor. And he has like 2 lost decades where he didn't make any profit. But of course, he's been growing at double digits. But for the last 10, 15 years, he's in insurance business, and it doesn't apply to us, I would say. If you're an algorithmic trader or a regular investor, Warren Buffett doesn't apply to you. You can invest in Berkshire Hathaway. That's what you should do, but not replicate him. But the people who are systematic and implement systems to trade the markets and run a hedge funds that are publicly audited and they have returns published yearly. I told you about Winton and Bridgewater. And then the next one, really, math genius. He is David Shaw, and he runs DE Shaw. They have like 60 billion under management, and they do double-digit returns. And so all these guys do around double digits, sometimes breaking 23, 22%. And then by far, like the number one is Jim Simons, who runs Renaissance. He's also a math guy. And this guy has been, getting like above 60% returns yearly for the past like 30 plus years. And this fund is so successful, it's closed. It's been closed for like 15 years. It's only to the employees that used to work at that time. So Jim Simons returned the money of all investors, and then they kept it to the employees. And then they've been generating 65 returns yearly, and after fees it's like 40%. So the fund takes a huge chunk of fees to the fund as a business, and then the return to the investors, which are the employees, is 40% per year. Now, of course, that's capped at a capacity. It's in billions, but it's not like 100 billion. And Jim Simons' net worth is like 24 billion probably. His second partner, he's like 15 billion. Actually, he's one of the big supporters of Trump, and he made him succeed in his last election. So, and you can read about this in Jim Simons' book. Anyway, so the moral is the best of the best is making 66%, 65%, and then everybody else of the best is making like 22, 23%. So if you come to this and shooting for, 300% a month, in what world you're living in, I don't know. Because imagine these guys have biggest magnet in the globe to attract talent. Yes? They can pay them whatever they want. They can pay them 100 millions. So they can attract the best talent. They have huge pockets, and they have the infrastructure, and they sit at the exchange. So what chance you have to compete with them? So once you reach that conclusion, then you say, oh, okay, then forget it. This is like, playing against LeBron James in basketball or against Messi in football. If you're against these guys one-on-one, you have zero chance. It's negative. Your edge is negative. You will never beat them. You will never have an edge over them. So once you come to this conclusion, okay, I have no edge there, then first thing to do is stay away from low time frame. That time frame doesn't belong to you. You will never have an edge there. It's impossible. Yes? Even the micro cents is being vacuumed by their machines. And by the way, today the tools and the software, the computer power we have is also a joke. When I started this 20 years ago, having an indicator on a chart was beautiful. Connected directly to the market was a huge deal. And I remember this in the .com bubble. I was one of the few. I was like, at the time, I don't know, the statistics were 60,000 people were connected directly to the market, where I can actually bid and change the bid nationally. So today, with a click of a button, you can find patterns and generate the code and deploy it. And so we have the tools. So there is no need to compete there. I hope I'm not discouraging you. I'm just steering you away from the zone that you don't make money in to a zone where you can make money. So there are edges available. Now, those edges, that doesn't mean those big guys didn't find it like a year ago and they're going to find it this year and they're going to beat you to it. No. It's just these edges are not of interest to them. It's like if if you're running a business making, let's say, $1 million a year, and somebody comes with a proposal, to make, I don't know, let's say $200 a year. $200 a year is a lot for this guy. You're making $1 million. You will not be bothered with this. You know it's there, but what's the point? So same thing with these edges. There are edges available. It's just the return on these edges is not worth it for the big guys to trade on it. So these edges will always be there. Some of them will disappear and reappear, and some of them will disappear forever and new one comes in. But the big edges are always there, and they cannot take it away from you. So then the longer the time frame, the better your edge will be. If you start daily, that's excellent. And if you go to weekly, that's even better. Having said that, that doesn't mean there are no edges in intraday time frame. It's a lot easier for you to build on daily, and then when you gain more experience and understand how the market works and how instruments works, dive into the intraday. Okay, so now we know it's a joke taking 1,000 to 1,000,000. Now again, because they might trick you in marketing, so this could happen, and I'll tell you how it's going to happen. Let's say today you meet somebody who won the lottery. He won $50 million. And then this guy, next day, he'll say, look, I will teach you how to win the lottery. Would you go for that? No. Yes, because it is, the chances are 1 in, 44 millions or something. So you will not do it. That's the same thing. Now, the concrete thing we know is you can make money in the markets. And you can easily make money in the markets. So let's take probability number 1, which is you have a career or working at a job that you don't like, or a freelancer, or a mom or a dad sitting at home, whatever. It's just trading is not for you. You don't like sitting in front of the computer. You don't like reading charts or programming algorithms or designing systems. It's not you, okay? And you've had enough with people shoving mutual funds down your throat and, holding the S&P 500 and facing 50% drawdown. You had enough. But you really want your money to work for you. So the easiest system is momentum. And you can read about it. You might find it as multifactoring, which is just a fancy way of saying relative and absolute momentum. Momentum has been studied forever. There are like 300 white papers written on it in academia, and there's like, 400 billion to my knowledge running on this momentum. And momentum makes double digits, and it's really slow trading. You just need 15 minutes a month, trade once, and then wait for the next month. And that's it. You'll make double digits with around 16% drawdown. So extremely good risk-adjusted returns. And then you can keep doing whatever you're doing. So to give you an example, if you invested $10,000 in a momentum system generating 18% return on average, then in 25 years you will have $620,000. That is huge, yes? It's $10,000. So imagine if you're in a business or having a side hustle or doing whatever and just keep depositing $10,000 a year. Then you really will end up with millions in 25 years. So the earlier you start and the more aggressively you deposit in your account running the system, the earlier you will retire. If you start at 20, then you can retire by 45. And it doesn't have to be you retire, it's just you don't need to work anymore. Then you can do whatever. You can pay, travel, or keep working. It doesn't matter. This is just a safety net for you. And the figure is connected to you. If your yearly expenses is $30,000, then you need to build on this. If your yearly expense is $500,000, then you need to build on this. So there is no fixed figure of what amount you want to reach. It's just this is a benchmark. 10,000 will be 620 in 25 years at 18% return. So that's really good. 15 minutes a month, that's nothing. Yes, no software, no charting, just a simple account, and today you can do it. No commission, because these are all invested in highly liquid ETFs. So you're not invested in single stock, and you're just tracking probably 6 assets, and you're done. Every month, 15 minutes, you're done. You can be on vacation, be working, out with the family, out with your girlfriend, watching a movie, doesn't matter. System will work for you. The system been working for the last paper I saw, it's like 800 years. So, and it will keep working, because think of this, the market has to move for you to make money. If the market doesn't move, then nobody makes money. So of course the markets will always move. It's just about which market. So that's why these momentum work on different assets. Now, if you are passionate about trading or want to make more money, and you can build systems and you have the tools and the computer, and you want to invest and put the time in, then you can shoot for 20 to 30% return. And if you implement position sizing and a little bit more aggression, then you can shoot for more than 30%. Then 40% is doable, but of course with higher drawdown. So for the people who can stomach higher drawdown, then you can shoot for 40%. Now everybody says, yes, I don't mind, but it does affect you. Having $10,000 and losing $4,000, that's 40%. It's nothing. I mean, relatively it's nothing. But if you're working, $4,000, what? It depends on what you do. You can get it in a week, you can get it in 4 months, I don't know, but you can get it. But if you're at $1 million and lose 40%, that's $400,000. That money will not get back from your work. That money, you'll only recover it through trading. So psychologically, it's really hard. So 40%, yes, the math is there. I can show you million Monte Carlo simulation, and you will make money after that. But can you handle 40%? I don't know. So, but 20 to 30% is doable with 20 something drawdown. That's also doable. And that you can achieve with building systems and trading them. So I'll give you the same example. $10,000 invested for 25 years at 25% on average yearly return will grow to $2.6 plus million. So now same account, and you only improved your return by 7%. Yes, you added 7%. It's not you improved it by, you improved it actually by 50% almost. But you went from 18% to 25%, and now your account, instead of 620,000, is 2.6 million. So you can see the because the curve is exponential. If you plot this, it is exponential curve. And if you give it 30 years, it will be double the return. It will be $4 million because of the exponential curve. So you can see you can make a lot of money starting small. You just need to start early. Or you just need, even if you're starting late, even if you're 50 today, give yourself enough time and you will grow to millions. So it's easy. You don't need to be a genius. You don't need to be a Jim Simon with $100 million in research and development yearly. And you don't need to be running 100 billion AUM to collect 2 billion commissions. You can achieve your financial freedom with either simple trading or active trading, and each one has different characteristics. This one makes more money with bigger drawdown and requires more time. This one makes less money, less drawdown, less time. Now, for the people who's going to ask about, okay, what are these momentum systems and stuff, I'm planning to do a video and teach you how to do it. It's really simple, and again, for those people who don't have the time, and so they don't need to be pressured to build systems and invest in all these tools. and put their time and energy into something they don't like, but they still want to make money. So until the next video, I hope this was very helpful to you. Please like, share, subscribe, so Google can push it to other traders and other people that are not traders that just want to make money. And until the next video, stay safe.